Okay guys, the word is out. You've been waiting for the news and it's finally here. The US Federal Reserve has increased interest rates just as expected by 25 base points or 0.25%. Well, the real question you want to ask is, how did this affect my crypto? Should I sell my Bitcoin, my Ethereum, or my precious Shiba Inu? Well, as with everything, the answer is actually unsurprisingly unclear. Today, the overall crypto markets actually increased as much as 1.1% after the US Federal Reserve announced a mild 25 basis point rate hike. Fed announcement pushes Bitcoin's price up. Will BTC sustain momentum? How the Federal Reserve interest rate hike could impact crypto. But what you really want to know is what the Fed's rate hike means for inflation, housing, crypto, and stocks. And Bitcoin surges past $40,000 as Fed hikes interest rates. And today we're going to discuss just that. And we're also going to discuss what specific factors about Shiba Inu have the potential to ride the incoming waves of both uncertainty and parabolic growth. And as usual, I'm going to be unique with my perspective and we'll discuss exactly what the purpose of the Fed's rate hike is, and I'll give you 3 analyst-backed perspectives, 1 positive, 1 negative, and 1 neutral, and then you can decide for yourself how you'll make your trades. But remember, this is just researched information and none of this is financial advice. And welcome back to SHIB Planet, everyone. This is Ace. There are more rate hikes scheduled for this year, so it's best to examine the first one, at least the impact of the first one, so we can map out a path for the next one. So firstly, do you guys know why the rate hikes are happening in the first place? Well, according to Bloomberg Wealth, what they're hoping to achieve by raising interest rates is that by increasing the cost of financing, they can slow demand on the margin for some of the goods and services that have such large increases in prices, and that process takes time. So basically, when interest rates are high, it costs more to borrow money, and this rate increase, it filters down and it reduces the demand for certain goods and services. For example, it'll become much more expensive to finance the home of your dreams, especially as interest rates go higher. And this reduces the demand for houses, and theoretically, it keeps house prices from rising too quickly. Did you guys know that it's the Fed's plan to make up to 7 rate hikes this year? And this recent one is actually just the first one. They have a target rate of close to 2%, which they're trying to reach because they believe that this is the rate which can optimally curb inflation without startling the overall economy. And analysts predict that we could see a progressive rate increase throughout this year, with some months actually having some consecutive rate increases. At least that's the plan, but it's not set in stone because factors like the current Russia and Ukraine conflict and its corresponding impact on fuel prices, it may cause the Fed to be less aggressive this year. So, how does this affect crypto? Well, firstly, as interest rates rise, some of the first asset classes to be impacted are short-term and higher risk stocks and crypto, and investors either pull out their liquidity or they reduce the amount which they invest. And today's minor increase had a very slight impact, mostly because some analysts were actually expecting a 50 basis point increase, so this 25 points is almost good news, and it's much easier to stomach for the time being. Okay, let's look at the neutral perspective first. According to Yahoo Finance, Elena Garadis, CFO and co-founder of DeFi Trends, told Yahoo Finance that crypto will ride out the impact in relatively stable territory. She said that traditional markets have already priced in 2 rate hikes, which infers that from this point we could be in relatively stable territory for crypto and specifically for Bitcoin. And in the same article, another CEO said that crypto usually suffers a setback when rates are higher, mainly because low rates inspire investors to look for other ways to earn returns from their capital. And she added that in this case, we actually have a bit of a tug of war in play because Bitcoin signals are currently bullish for many reasons. And to summarize, she goes on to say that those 2 reasons are the continued increase of adoption of Bitcoin across the globe, and especially the hash rate, which continues to increase, and also the holders are increasing, and there's also more institutional investors who are dipping their toes into Bitcoin. And the second reason is that US regulatory conditions have forced Bitcoin capital to move offshore, especially where it's thriving. So basically, there's a scenario under this case where even as rates increase, these positive catalysts, they're going to offset any potential downside and keep Bitcoin relatively stable. And which is not great, but it's also not bad. And if I apply this same perspective to Shiba Inu, I could say that Shiba Inu is a much more volatile asset than Bitcoin, and large investors are less likely to hold on to SHIB if the rates increase too fast too soon. However, there is a strong possibility that this year's catalysts are major enough that they'll bring in waves of new investors and give confidence for current whales to invest even larger amounts. For example, the upcoming Shiba Inu game, which is being developed by a AAA game studio, will be targeted at a non-crypto audience, and it's designed to be a quality piece of work that may draw new people into crypto. And as you guys already know, Shiba Inu is actually very good at bringing in new audiences already. Do you guys remember that Shiba Inu was singled out by Crypto.com as being one of the biggest single contributors to the sharp rise of crypto holders in general in the first half of 2021? Also, the John Richmond partnership is a very high profile one, but it's not directly crypto facing because it's in the fashion industry. Anyway, over the next 2 years, it's expected that Shiba Inu will attract an even bigger audience if this partnership turns out to be successful. And of course, on the tech side, the Shibarium blockchain is the key tech which will be able to give value to the whole ecosystem. So basically, my perspective is that these 3 catalysts alone in 2022 might be strong enough to at least keep SHIB quite stable even during rate hikes. Okay, let's talk about the negative perspective. In an interview with Yahoo Finance, UK analyst Market Soteriou said, "I think Bitcoin and the crypto space is unlikely to gain significant traction in 2022. This is because the Federal Reserve is taking liquidity away from markets and people may have less money to spend on risky investments due to surging inflation." And this is also a possible scenario. Basically, rate hikes are just one of several other factors which affect the market. For example, I'm sure you guys know that fuel prices are going crazy at the moment, and fuel impacts almost everything. High fuel leads to higher logistics costs, which then get passed on to regular goods and services, and this in turn gets passed on to us as retail investors, and we'll end up struggling to invest and to buy the dip. Also, this article from Bloomberg Wealth says, "Rising rates are like a wet blanket on crypto," said Mark Hewen, Chief Investment Officer at Bitwise Asset Management. "If investors can find yield in lower risk corners of the market, that suddenly makes crypto less attractive. Bitcoin prices have slumped around 40% from their high in November, and Ether has lost nearly 45%. And as I mentioned before, crypto is considered high risk, and if the Fed continues with this plan, liquidity will come out of crypto first, especially as institutional investors choose safer options. And if this happens, this is really bad news for Shiba Inu, because right now the whales are the ones who are keeping SHIB above the 20 unit price point. And if the retail investors are forced to pull out, this might mean that they might pull out larger amounts to save their big bags, speaking of the whales. Because remember, they're actually more retail investor wallets, but the whale wallets probably have larger amounts overall, so we kind of need each other. Okay, enough with the negative perspective. Here is the positive perspective. According to the CEO of brokerage platform Tradia, the rate hikes could actually drive more institutional investment into crypto in general. In an interview with Bankrate, the CEO anticipated a net positive in 2022 because any short-term declines driven by rate hikes will be offset by greater institutional and retail active trader adoption of this asset class. And to summarize the rest of the article, he basically said that crypto, Bitcoin in particular, has way more positive activity than negative activity. For example, Europe recently reversed its proposed ban on Bitcoin crypto mining. And also, the incoming South Korean president is very pro-crypto, which is good for crypto adoption by nations going forward. And also, Ethereum had much more transaction volume last year than Visa by trading a massive $11 trillion versus Visa's $10 trillion. So he's basically saying crypto momentum is growing rapidly and no one can stop it because clearly people want it. And if I was to take a page out of his book and apply it to Shiba Inu, I think I could say a similar thing, because Shiba Inu continuously and consistently trends on all social media, and this has attracted the attention of even big companies and nations. And also, did you guys know that people from the SHIB team actually recently had a discussion with a former minister of the economy of Turkey, and they discussed the Shiba Inu ecosystem with them? And also the CEO of AMC is always enthusiastic about their newfound relationship with Shiba Inu. I'm sure you guys have heard of that by now. And I've already talked about some of the major internal Shiba Inu catalysts earlier in this video and also in previous videos, so I'm not going to repeat them. But one of them is the introduction of the burn portal, which is in the upcoming ShibaSwap platform. I really believe this is going to be massive on so many levels. Interestingly, I once made a video proposal about how I think this can actually be implemented a few months before the burn portal was actually announced, and it looks like a version of what I suggested is actually happening. Although I know that many people have already given different versions of this in the past, I basically discuss how this feature has the potential to burn up to 50 trillion SHIB a year, at least potentially. And I even suggested this to Shitoshi once in a private group, and he simply replied, no comment. And if you guys know Shitoshi, he'll straight up tell you if something is out of line or not possible. So anyway, I'm quite excited to see what happens after this. Anyway, I do see a scenario that Shiba Inu's positive catalysts outweigh the rate hikes and leave us in a net positive position. And I think that is a good point to end today's video, guys. Before I finish, I'm really interested to know how much have fuel prices gone up in your local area, guys? And how is this impacting you? Also, which scenario do you think is going to play out for Shiba Inu this year? And with that, I would like to say thank you so much for watching, everyone. If you did enjoy this video, please leave a thumbs up. Alright guys, this is Ace. Peace.